Hello traders, welcome back to my channel. Today we are going to discuss about a strategy which is getting very much popular these days and everyone are talking about it, and that is called as trap trading. Today we will learn how are we going to take trades based on this trap and how are we going to avoid such traps. Here you can see the chart of the Tata Steel. You can see that I have entered at around 108 rupees and exited at around 138 rupees with risk to reward ratio of 1:4 and a profit target of 27% ROI. Now let's jump into the monthly time frame and analyze the traps and how to avoid the traps and how did I manage to take this trade. Now drawing a trend line is very crucial part of trading. You always have to draw a correct and a valid trend line. Now here is a trend line which I am going to show you is not a valid trend line. That is because it doesn't have multiple touches, just first, second and at the third touch we are getting a breakout. This is not a valid trend line and I clearly avoid such trend line. Now the proper way of drawing a trend line is identifying the maximum number of touches which will respect the trend line. That is, let us just modify this trend line to here. Now here you can see that we are having multiple touches, that is 1, 2, 3, 4, 5. At the fifth touch you can see that it is giving a breakout. Now this trend line is validated just by giving the retest of the trend line, and you can see we could have entered over here and made a good profit. But after this bullish move, you can see that once again it turned negative and took support over here, and later on it turned again negative and pretty much traded below the trend line. But we need to identify this point, like why did it take support at this point? It could have taken support somewhere over here, or as a matter of fact it could have taken support exactly on the trend line itself, but it didn't. Instead it took support at this point. Now this red candle is a strong red candle, and here the majority of the retailers would have taken entry because the retailers were pretty much impatient. They just want to get into the trades and much money, and that is not how trading works. You have to be very much patient. Now let's talk about this point. Now this point is acting as a support. Now identify that support with the help of this trend line. See, now it is pretty much clear that why the asset has taken support at this point and turned bullish. The majority of the retailers have entered here and the stop loss has been triggered. Now the proper way of trading the negative of this trading negatively is we have to wait for the asset to give the breakdown of this particular trend line and then make some kind of a retest and then give a breakdown and we could have entered. But fortunately it didn't trade below this support trend line and it turned positive. After turning positive, you can see that it pretty much respected another trend line and gave a breakout. Now I avoid this taking trade on this trend line because there is no retest. I follow a very simple rule, guys. That is no retest, no entry, and there is no retest over here, and I am not going to risk my money on this trade, so I have not taken this trade. So this was the first setup how you can avoid getting trapped. Now let us analyze this particular swing, that is from this swing low to this swing high, just by applying Fibonacci retracement tool, that is from this swing low to the swing high. Here we can see that after creation of this high, asset turned negative and broke this 23% retracement level. Now it broke with a strong red candle, but there was no follow-up. That is, price did not trade below this candle's low. Instead, it turned positive and created a bullish engulfing candle. Now bullish engulfing pattern is created exactly at the support level is one of the best confirmation for you to look for the trades. But this is not the point where you have to take the trade. You should always look for the breakouts. So that is why let's jump into the weekly time frame. Here in weekly time frame we can see that price was respecting two trend lines. Now this is the first trend line. I call it as the resistance trend line, and here is the second trend line. I call it as the support trend line. Now here you can see that after this rejection over here, asset turned negative and gave a bearish breakdown. Now this is also a trap, guys. because majority of the retailers will jump into the sell side just on the fact that it gave a breakdown of this trend line. And here you can see it is also creating lower lows and lower highs. But the major trend is bullish, and that is why we always have to find for the bullish setup. Now how can we avoid this setup? Now avoiding this setup is pretty much easy just by applying Fibonacci tool from this swing low to this swing high. Now here you can see that it is taking support exactly at 50% Fibonacci level. Now as you know, 50% Fibonacci level is one of the strongest support. If asset gives a breakdown of this level, turns negative and touches 61.8% level and then gives the breakdown, then we could have entered into the sell side of the breakdown of this trend line. But instead it took support. That is because it was just a trap to trap all the retail traders. Here you can see that after this breakout, exactly at 50% level, there is another support creation. Now, even if you have identified this support and you had not applied the Fibonacci tool, at least you should have waited for the price to break the support level, wait for the consolidation, then after the breakout you could have taken the trades. Now this is the valid trade if it was going to be negative, but instead it turned positive by just taking support at 50% Fibonacci level. Now let's jump into the daily time frame in order to identify the possible breakouts. Now here in daily time frame we can see after this bearish breakdown and majority of the retailers have been entered here and they are pretty much cramped. There is one head and shoulders pattern which is getting formed over here. That is, let me draw the neckline of the head and shoulders pattern. This is the neckline of the pattern and the head and shoulder pattern is, this is the left shoulder, this is the head and this is the right shoulder. Here is the breakout of the neckline and this is the retest. Now taking trades based on this setup is very crucial, because after the breakout you can see that there was first retest exactly at this point, and the exact trade should have been taken at the break of this high of this candle, that is at this candle. But unfortunately I missed that setup, so I was pretty much waiting to give a bullish breakout. Now here was the bullish breakout which I should have probably entered after this green candle or exactly at this green candle when this high was taken out somewhere over here. But I did not take that because as you know, even I am a retailer and even I get impatient, and I have exactly placed my entry when it was retesting this trend line. Now this is an aggressive entry, traders, which everyone needs to avoid. This is the only mistake which I made by taking this trade, which you should not follow up. So here is the result, guys. That is 27% ROI with 1:4 reward ratio. Now in this video you pretty much learned how you could have avoided the traps and taken the trade. Thank you guys for watching this video. If you found this video helpful, and please share this video with among your fellow traders, leave a comment and like. Thank you for watching. Until next time, take care and happy trading.